Good afternoon, everyone. I know Aisha doesn't know about me because she knows about the what I have been doing, but haven't been attending my session. But AJ knows about me, so I'm just sharing you. I need energy, and I'm full of energy as a person, but I need energies from you people. So I'll be needing a lot of vibes from you. So I need interactive session. It has to be putting across as each one of you looks forward to. I think a lot of people are from Bangalore, Hyderabad, and across India. So this session will be a session which will be across understanding financial well-being. So let's start with it, and I need energy, and I can have it only through you people. So let's say start with a hi. Hi everyone, and that will give me a boost to start with. Can I have a hi from everyone? Yeah, thank you, Sachin. Thank you so much. Thank you, Sai. Thanks, Sagar. Thank you so much. Good. So any queries in between, any questions in the session, I'll be putting across. If I can answer those session immediately, I'll answer that. Otherwise, there's a 15-minute slot in the end of the session. We'll take it over there. Okay, good to go. So start with, I'm just sharing you the screen. Hold on. Okay. So is it visible to everyone? Yes. Okay. So let's understand. How many of you, to start with, I'll just ask a simple question. What do you understand by financial well-being? We all are talking about, I think Nova Benefit is all about health well-being. So what do you understand by financial well-being? Any answers? Anything what you think about? How will you feel financial well-being as, how will you feel when your financials are good? Financial planning, financial stability, passive and active income. Very nice. Stability in finance. Good. Okay. So you want to be stabilized in finance, retire early. So a lot of goals are being written down over here. What I understand, a lot of people are understanding through that. Okay. If our objectives are clear. So if I talk about putting it across in these 3 points, if I am clear about meeting my financial goals, if I'm okay with preparing on unexpected events, if I'm prepared with them, and if I'm I'm satisfied if every financial situation is being covered. These are the 3 key areas. Am I right? If we cover these things, this covers all those questions which you are putting across. So if I'm financial goals, whether I'm retiring early, passive income, active income, unexpected events, all these things covers, right? So this is what I'll be covering today. To start with, I'll just share you 3 points about how financial well-being starts, how I can achieve these financial well-beings. First thing is how I can prioritize, second, plan, and 3, review. These are the 3 key areas of financial planning or financial well-being. So I'll put across this in a portion. I'll cover you each section, section wise. To start with, I'll just put across how prioritizes works. So there's a beautiful quote by Stephen Covey. The key is not to prioritize what's on your schedule, but to schedule your priorities. What we generally do is we try to prioritize our schedule rather than prioritizing the right things. Scheduling what is right for or what is prioritizing. So that's what we're going to cover, and we'll identify those things what need to be prioritized. I'll be talking about those things, making you understand that. Is it okay? Second, we'll talk about creating a financial plan. We all, friends, we all being working. What are we working for? Tell me one thing. We are working for money or working for our goals, objectives. Am I right? Our goals and objectives, that's what we are working for. Or are we working for only money? Money is just a stream, am I right? Or what are we working for? Each one of us have some objectives, and that's what we are working for. Yes? Absolutely. So that's what I am going to cover on good life, working goals. So these are all objectives of life. We are not working for money. We are working for absolutely mental peace, a good life. These are all our objectives of life. For somebody, it might be mental peace. For somebody, it might be retire early and get sorted. So whatever that objectives are, or even your child education or whatever those things can be, the objectives have to be clear. So to understand, let's understand your financial plan, how it is going to work out. First is understand your financial position. That's what I will be covering. Second, I'll be talking about preparing for contingencies. We'll be talking about planning your goals for future. We all know about those things, but I'll talk about in depth. You'll be really surprised to understand what the real goals are. And then piece about your finances. That's what financial plan is. So for end of the things, if you have created your plan, you need to review it. Plans does not work if you don't review it yearly or yearly. So financial plan works on these three pillars, and I'll be covering this during the session. Is it okay? Are we good to go for the next slide? Yes, this was just a basic idea about how we are going to cover it. So let me put you across with the first thing, what we'll be covering today: understanding your financial positions, identification of real goals. We'll talk about protection. We'll be talking about strategies of investment. So these are what I'll be covering. And this is what I'll be starting with. So tell me one thing. Do you understand? Give me money for the month end. How many of you feel that end of the month, I'm not left with anything, or whatever I've planned for? Let's say I have a budget of, let's say I think I have a budget of 50,000 as an expense, and it goes 70,000 or 80,000 or 90,000, whatever it is, it goes haywire. End of the month, whatever I have planned in the beginning, it never happens that way. Does this happen with everyone, or is there any exceptions? Is it right that it happens to everyone? That whatever we have planned, whatever we have thought about, end of the month, it never happens. Tell me why this happens. Any answer? Am I to blame? Yes, absolutely. Absolutely. So there are a lot of other lucrative options coming on. So whether it's flip these Instagram messages, or lot of things are being online being sold, so we get tempted towards those are the one of the reasons. But what are the reasons? Basic reason of it: we get tempted, we get short of money. But what is cost of living is high. Okay, Venkat, my son is also working in Bangalore. I'll just have to check it out how difference it is from Delhi and Bangalore. So let me put you across what is the main reason. Tell me one thing: how many of you know your expenses? Right? Yes or right? No. How many of you know your expenses? Yes, yes, yes. Oh, great. Very nice. So few of them are writing no, rest of them know everything about their expenses. Tell me who have written yes. Have you ever written down those expenses, or on month basis, or are you calculating in your mind? How many of you have written down expenses month on month basis? App, okay, great. ET Money expenses tracker, great. Excel sheet, great. Okay. So tell me one thing: what do you do with that Excel at the end of the day? What are we doing with those Excels? What are we tracking out? People who have written down, what are we tracking out? Cross-check it. Has at any day anything worked out for that? Nothing works out those ways. Why I'm telling you, you cannot cut down those expenses. Those expenses comes out again and again. The reason is that generally what people do is track their expenses which are recurring in nature. First thing, recurring in nature, why I'm talking about is you cannot cut down those expenses which are recurring in nature. The expenses which come on occasionally, let's say your clothing you buy on sales. Nowadays it happens in 3 months. You bulk buy on sales. You have your, you can say, celebration, Diwali, Dussehra. Have you ever written down those things and calculated in our monthly budget? We haven't done those things. We haven't done those things. What we do is we only calculate our monthly expenses on a recurring expense basis. That's the biggest problem. What we need to do, whoever is not writing it down, why I say is that I have been also trying to write it down, but you cannot continue lifelong as a tracking as a tool. You can't do it. Stupidity. Can you track every day, every expense? I feel it very boring and very, what should I be doing about it? What I need to understand from expenses is my monthly budget. That's the reason of putting it across. So if we track it for at least 1 year and leave it, why I'm saying so, your expenses do not bounce off again in a year-on-year basis. The major thing is you need to know about what is your monthly budget. Now, monthly budget comes in the whole year's expenses divided by 12. Now, those expenses are those annual travels, those emergency travel, your medical emergencies, or any friend or borrowing, or anything which is not recurring in nature also combines in those things. When you come into that, let's say, while we were thinking about our monthly expenses of 50,000, it goes out to be 70,000. Let's say I am earning lakh of rupees. I now get to know that what is the right amount of surplus which I can save. The major challenge with everybody is that we don't know what is our expenses, and that's why we are not able to identify our real surplus. What we do is, on the other hand, we keep a lot of money in our liquid accounts. Let's say I am earning a lakh of rupees. I'm just giving an example. I understand that, okay, I have an expense of 50,000, whereas every time it goes 60, 70, 80,000. For that reason, because I'm not aware about what is my current expenses, I keep a lot of liquidity in my account. So I keep lakh of rupees in my account. Do we all do like this? We keep that liquidity in our account because we don't know our expenses. Now, what happens is, those are kept for contingencies. Am I right? Those are kept for contingencies, but those are used for other things. Let's say shopping, like Amazon. Because it is kept in our account, we tend to spend it. Am I right? Is it what is happening? This is what is happening or not? Yes. So what we are doing is, we are keeping our liquidity because we don't know what our expenses is. And that's why we are keeping a lot of liquidity in our account. So if we identify, so what we need to do, I'll just crux it to the chase. What we need to do is, whoever is not writing down, write it down or track it. Use a lot of trackers which are there. At least 6 months, if you can't do 1 year, at least 6 months of tracking of your expenses, or last 6 months average, if you take it out, that these were the expenses which I did in a whole of year. If I can track it down, write it down, divided by 12, that is what your expenses are. These are the expenses which come occasionally, and that's why we think that where is this money going? This was being backlogged by current months. So tracking those out will make you understand, okay, now my expenses is 70,000. 30,000 is the amount which I can liquidate and I can park it somewhere else, whether it's savings or whether it's planning for contingencies. So first thing we need to do is write down our expenses divided by 12. That's our monthly expense, actual monthly expense. Now rest of the money, where it should be going. What should be done by the rest of the money which I know I should not be spending? What should be done about it? What is your answer? What should be done? Let's say 70,000 is my current expenses, 30,000 left in the account. What should be done by that 30,000? Save. Okay. Save where? Save and invest. Yes, invest. So don't you think first thing what we need to do is, why we have that fear of keeping that money in liquid account? The fear of contingencies. Don't you think? We are keeping that money for other reasons. That reason has to be spent on Amazon again. Okay. So jokes apart, it's about keeping ourselves free from that tension of liquidity. How I can reduce that? That has to be reduced only by first planning out my contingency fund or creating my contingency fund. If I know that, okay, I have surplus for the other things, then only I can plan it out now. Can I plan it out? What is the fear of keeping that liquidity? The fear is that I don't know what will be coming next. So if I prepared my fund for contingencies, then will that be easy for me to start investing? That's when we can start investing. So first thing is plan your contingency. Now, what is contingency? Emergency funds are what? Why do you need emergency funds? The emergency funds can be medicals. Am I right? Medical expenses, emergency travel to your hometown, or let's say job loss. These are the three things which you think about, or anything else can you think about? These are emergencies. So if I plan it out and keep this kind of fund, the fund which is required. So for maximum, what I can think about, see, for medical, we can take a medical insurance. For travel, we can keep certain surplus. What is the surplus, right surplus? So see, there are numerous ways of calculating. There are numerous thumb rule for it. Basic thumb rule is whatever your monthly expenses, if I talk about, which is recurring in nature. So what happens is, what we have seen in during contingencies is that the emergencies required was only the basic things. So if we know that, okay, rentals, food expenses, travel, whatever is recurring in nature, that has to be at least taken care for 6 months. So if I have a 50,000 as recurring expense, the rest can be deferred, but these cannot be deferred. At least 6 months of surplus has to be created, kept it aside in a fixed deposit, not in a saving account, in something which you can't touch easily, but it can be liquidated in a day's time. That if you're setting it across, next thing is start investing. Are we getting it? Are we clear on emergencies? Track down your expenses, divided by 12, create your contingency fund, and then move towards your creating of investments. So are we okay? So let's start with how to understand why investments, why savings. We have got it understood, the planning of part of how we can manage expenses, budgeting, and creating contingencies. But why do we need savings? We have all answered those queries in the beginning itself. We all have objectives. Am I right? We all have objectives in life. What percentage we need to, Jayendra, we actually, I just told you that it has to be your recurring expenses. This is just a thumb rule. People, it varies from person to person, it varies from job to job. But the basic thumb rule is at least whatever is your recurring expenses, 6 months, 4 months to 6 months is the thumb rule to keep it as an expense. So let's say 50,000 is your recurring expenses per month. So at least 2 lakh to 3 lakh is what you need to keep for. Okay, does it answer? Okay, so why savings? We had answered this query in the beginning itself, but I need answers again. Why savings? Why do you need savings? Anybody? Why do you need to save? Somebody told me, I want to retire early. Do you think retirement is one of the reasons why we need to save? Yes? Yes, okay, great. So I'll take an example of myself. I'm reducing my age. I'm 48, 49, but I've reduced myself and I have the benefit of being a speaker. So I've made myself 27-year-old to make you just visualize a young couple. So 27 years old, Puneet, wife is 26 years, Satvik, son is 1 year old. What do you think are going to be their basic goals? So we all have our own desires, our own goals, our own objectives. But to understand, certain goals are common in nature. So let's understand this young family. What do you think are the 3 prime goals for this couple, this family? Long-term planning, but what are the objectives? Jens, anything? Sai, what do you think can be the 3 prime? House, great. Thank you, Sunita. Child's future, great. Anything else? Education, health. Okay, great. Education. So child's future comes in as education. Okay, great. Anything else? So everybody has talked about property. Yes, house, okay, health, child education, personal goals. One goal is being missing. One goal is being missing. Insurance is just a coverage point of say. Safety, yes, okay, great. Marriage, car. These are all smaller goals. 3 prime goals. Pension, yes, Ravinder, I was looking forward to this. If I talk about, don't you think these 3 are the prime areas? Child education, house, retirement. Am I right? These are the 3 prime areas for creating a house, and child education, then retirement. Am I right? These are 3 prime areas for everyone. Yes. So if I talk about, everybody has written down child education, house, pension, this, and other goals. Can you prioritize on these? I started out with prioritizing. Can you let me know? Let's say child education A, house B, and C is retirement. How will you plan as prioritize these things? How will you plan? Child education, ABC, write down ABC, CBA, BCA, whatever, ABC, BAC, okay, B is okay, ACB, ABC, ACB, BAC, ABC, okay, ABC, ACB, ACBA, okay. So to To conclude onto it, everybody has maximum written down A as first. C has been always the last one, but in middle or last. So for somebody, it might be second, or somebody who has already created house might have been writing out C as second. So what I'm trying to put across is that we all talk about education as the first priority, because we all see everything towards our child. Am I right? We think, okay, first is child education is our priority. Tell me one thing. If my child is good in studies and he's being selected in good college, can I get a loan for child education for education for higher studies? Yes. What about house? When I buy a house, do I can easily get a loan for house? Yes, easily. Aajkal housing loan we can get easily. Yes. Tell me one person who got a loan for retirement. Anybody who got loan for retirement? No, no, no. So what should be our priorities? Actually, you'll be shocked to see when I'll be taking the retirement part in this and making you understand why C is very important, because you'll be shocked to see the numbers. So today I'll be showing you the real numbers, how need to be calculated. So these goals, friends, we all understand these goals. We have been actually from childhood, we have been taught to identify these goals. Our parents itself started off, okay, beta, just this is a piggy bank, start saving. We need to save for your child, for your education. Am I right? These goals are very clear. But did anybody made us clear how much I need for my child, or how much I need for house, or how much I need for retirement? Nobody actually guided us. Today also, we are not actually being guided that what is the real goal or what is the real objective where I need to look forward to. Everybody who's coming out is just selling the product and going away. They're not looking at what I'll be needing. So let's understand how I need to identify my real goals. So just to put across, I'm just sharing you an example of Satvik over here. We all understand we need money from 18 to 22. Do we agree? This is the first graduation part. This is what we are looking at. Yes. So what do you think? Do you, as a child, can I identify where a 1-year-old Satvik will be when he's going to be 12, when we'll be going in for graduation? Where will he be going? What he will be doing? We can't judge out. Can we judge our kids' future? No. Am I right? We can't judge out where I'll be going, where he'll be studying, whether he'll be doing engineering or whether he'll be doing an MBA or what all, whether he'll be studying in India or he'll be studying abroad. We don't know. But what we know is what is our budget, where I can afford, what is my aspirations. It will change over a period of time. That's why I said review is important, because goal is being created according to you, might be changing according to him. There are things which will change. There will be circumstances will be changed. But what I know is I have to start, and I have to start with something. Now I have to start with some numbers, some identification. And now how should I identify that? So for that, I need to identify each goal. For, let's say, higher education. How many of you, let's say, to take a basic one, if I have to educate my child in India, in some private institutions, some private good institution, let's say Christ in Chennai, or Symbiosis in Pune, or Flame University in Pune, if I talk about, or Amity in Delhi, what is the current price you pay as an annual fee in all these institutions? No, it's too wide. For, if I talk about, you are talking about 3 years, 12 lakhs. Any guesses? It's approximately 5 lakh rupees, 4 to 5 lakh rupees per annum is the cost today per annum for any institution. Yes, 3 to 4 years is 20 lakhs. Absolutely, one. So that comes out to be 5 lakh rupees per annum. Absolutely, 5 lakhs Symbiosis Pune. Absolutely, it depends on Flame charges around 10 lakhs, but average is 5 lakh rupees is the average good college in India. Now, if I track it out, I can understand, okay, these are the good institutions I can track on. What will be the value, whether 5 lakh will remain same in 17 years or will it increase? Will it remain same? No, there is an inflation to it. Am I right? So what will be the cost of 5 lakhs 18 years down the line? That's what we need to calculate. And I'm going to share you what it's going to cost you. So this is what is 5 lakhs value. At 18 years, it will be 13 lakh 46,000. At 19 years, at 14 lakh 27,000. And at 15 years, at 20 years, it will be 15 lakhs. So average, it will be coming out to be around 45 lakh rupees. Now it is a 6% inflation I've taken on a basic one, but you can change according to inflations and it varies differently. But an average 6% gives you a broad idea about 45 lakhs. That's what required. Now, doesn't it seems a big number? It looks a big number today. But if I tell you, it can be achieved if you start early. Yeah, present value and you absolute time value for money. So this is a big number. But if I say if you start early and you just start saving 6,712 rupees and earn 11% return on any product which is decent, which is giving you 11%, you'll easily achieve this goal. Now, why I'm saying so? Because till now, I was not even aware about what is my goal. I was not aware about how much I need to save for it. So how I start saving is, okay, I have 2,000 rupees extra or 5,000 rupees extra. Let's start saving for our goals. Let's start an SIP for 5,000 rupees for kid or 2,000 rupees for kid, without realizing what is the going to be value of that at that time and what is the value what I need. I'm not saying it will be going to be achieved in a day's time. Now I'll put across in later slides, just giving you a broad idea about that. It can start with 6,700. Okay. Now come to same thing comes into any goal. If I identify, same thing comes into house. Have we ever thought about identifying? We all think about building a house. How many of you have thought about creating a house? Yes, yes, Karu. Yes, I need yeses. How many of you want to make houses? Yes. And how many years are we thinking of for a song? If people are there, there might be people who have been thinking for 3 years. I'm not asking you those personal questions, but there are who have been thinking for long to buy those houses and not able to do it. Every time we think about, okay, next 3 years we'll buy a house. Am I right? Yes, I agree on that. I know that everybody is not going to write on, but this is the right, correct. So what happens? Why it's not happening? The reason is we haven't again identifying what is the area we need to buy for, what will be the value of that area today. If that is the value, let's say 1 crore is the value in Gurgaon, how much down payment I need to pay for that? If it's 20 lakhs, I need to create in 5 years, it will become 25 lakhs. For 25 lakhs, how much I need to save to create that in 5 years? If you can't create it, if you don't identify it, you will never be able to achieve it. You have to start small, but at least you need to create and understand how much period. Certain goals can be deferred. So if you're not able to create it in 5 lakhs, you will be able to create it in 6 or 7 years. But you need to identify how much you need to save. Are we getting it? Same way, I'm not taking on house more on this, but for this, you need to save. If I talk about starting with 33,000 per month for at least 25 lakhs rupees as a corpus. Now, this is a big amount. If I'm earning a lakh of rupees, 50,000 is my expense, 33,000 is a big amount to start with. Am I right? And I have to save for child education also, which is also my priority. That's the reason which killer comes in. That's the reason we are not able to save. Am I right? But I'll show you the result. How will it be worked out? Okay. Now let's come out. Amdani Athani. Okay. Okay, Pramod. No, it's not about that. It's about Amdani will always be Athani. We have to save between 8 and 6 only. So we'll be doing that. We'll learn about that. That's why I'm here for. Okay. So let's come to the most important aspect about retirement. So I'm again taking an example of Puneet. He's 27-year-old. A lot of us want to retire early. So Puneet also decided, let's retire at 50. I'm not working at 60 or 70. I'm just going to retire at 50. So still he has 23 years, which is not small period. It's a good period, 23 years of retirement. So how I need to calculate about is to judge out that what is my current expenses today. So let's say 50,000 is my current expenses today. I have to live on that same expenses now. But will that same expenses remain same or it will increase in 23 years? Do you know what will be the value of these expenses in 23 years? Any idea? What will be the value of 50,000 after 23 years? No. Any idea? No idea. So it will be approximately 1.9 lakhs. Jayendra, absolutely, Jayendra, it's quite close. It will be 1.9 lakhs. Now, when you retire, does government allow you to that, okay, now you are retired, there will be no inflation, now it will remain 1.9 lakhs? Does that happen? No. No, inflation will be always there. It will continue. So will it be there when you will be turning around 60 with the same corpus? Do you know what will be the value of 50 lakhs by that age, 60 years? I'll not put you across on glances. This is what is the result is. By 60, it will be 3.4 lakhs. That same 50,000 will be 3.4 lakhs. By 70, it will be 6 lakh 12,000. By 80 years, it will be 11 lakhs. So means whatever you are spending 6 lakhs today will be 1.32 crores per annum. Is it shocking? Is it shocking or no? Yes. This is why we need to create a corpus. And do you know what will be the corpus which we require to sustain? Because you are retiring at 50 and you will be surviving till 90, till 85. You will be working 23 years, but you will be eating for another 35 years. So you need to create a big corpus. Now, what is the corpus required? Any guesses? It will be 5 crore rupees. And that too, if I'm talking about this corpus will be eaten by you. It's not leaving an estate behind. This is 5 crore, you'll eat it. For that, you'll be needing 33,000 per month from today to save. Now, think about it. Child education, 6,700, house, 33,000, retirement, 33,000, total 72,000. Will I be able to take it out from my 1 lakh rupees salary? HR discussion required. You'll actually cut off my speaker sessions. Later on, I'll not get any sessions. For sure, Aisha will cut me down. No, it can be. See, this is not an HR problem. This is a basic problem from everyone. Whatever we get will not be able to be sufficient for us. What we need to know is we have identified goals, friends. We have identified. We understand this is what is required. Now, everything is not a priority currently. Child education might be a priority. House might be the first priority. Retirement has to be done. But at least now we know that we need to save. Now, what needs to be done about it? So if I tell you that it can be easily achieved, how you can achieve it? So if I'd say that, okay, you can't save 72,000, but you can save 20,000. Can we save 20,000 today out of 1 lakh rupees? Yes. That is decent. 20% of saving has to be gone. 15 to 20% is minimum which you require to save. Let's say 20,000 we start with. And if I say that you just increase your savings every year by 15 to 20%, let's say whatever you are saving last year, let's say you are saving 20,000. So 20,000, 20% means 4,000 rupees. Can I increase my saving from 20 to 24,000 next year? Hema, this is an example. Don't take it on a 1 lakh rupees. It's just an example. 50,000. If it's 50,000, it's going to happen same way. I'm just giving an example. You have to cut down accordingly and you have to start saving accordingly. But just giving a hint about it, that if it's 20,000, if it's 50,000, you can say 5,000 or 10,000, whatever you can say. You start saving at least. Now, if you increase it by 20%, can we do that? 15 to 20%. What we do generally, friends, what we do is whatever increments we come. So let's say at least 5% in increment is always there. 5 to 7, 8, 10%. That is an average 5 to 10%. Am I right? So if I'm earning a lakh of rupees, am I getting 10,000 rupees an increase? Basic I'm talking about. What am I doing with 10,000? Because I don't know my goals. I don't know. I'm not worried about these numbers. I actually spend those. And if I just save 4,000 rupees extra and 6,000 spending, can we do that? Can't we do that? 4,000 rupees just to add on from the increment I've got. Hardly 40% of whatever increment I'm getting. We can easily achieve, and these goals can be easily achieved if you just add 20% to last investment. You can easily achieve. Whether you are earning 20,000, whether you are earning 50,000, whether you are earning 1 lakh rupees, whether you are 2 lakh rupees, The same criteria goes accordingly. Are we clear on this? You have to start. The purpose is identification of your goals, understanding about it, that we need to, what we do is every increment, we increase our expenses. We don't increase our investments. Yes, I don't know your name, MD, but debt is a killer, but you need to plan out to set off those as a goal, create a goal for setting off those debts first, and then create other goals. Take a goal, make it as a goal also. Okay. Are we clear on this? Can we go ahead? Okay, great. So solution is start early, step up with the small investment, small amount and increase, plan your goals, invest wisely according to your goals, and finally protect your goals. So don't you think that if everything is going fine, one fine day some news comes and everything is broken? And we have seen these mishaps in life. During Corona, it was quite visible, close ones to, and we all have seen those things. We have also lost families. We only realize when something comes to us. But don't we think it is when we should be prepared for these things? And preparation is very, very important. I've seen my clients, not my clients, but people coming on after these problems and reaching out that everything is gone. So I am talking about certain things which has to be taken on when you are at right positions. So I'm talking about insurances. And today I'm only covering term and health insurance today. We all understand, I think you people are very well aware about health insurance. I'm going to talk about something which you haven't heard about, which might add value to you. But all of us understand term insurance. Do I need to explain term insurance, or is it clear about term insurance? I have just 5-7 minutes of my session, 7 minutes and minutes. Clear? Please explain, please explain, please explain, will help. Okay. So to just give you a crux of it, see, term insurance is the purest form of life insurance. What is purest form of life insurance means that lot of times insurance, when we talk about life insurance, there were products which used to give us cash benefit at the end of year. But term insurance is the purest form. It means that I don't want investment product. I want my coverage in sense that if something happens to me, what is my family getting? So if I'm taking a product with a cash benefit attached to it, or benefits which is going to give me after 20 years or 15 years, money attached to it, it becomes quite expensive to save. So if I talk about buying a old traditional life insurance plan, if I want to protect myself, 10 lakh policy might cost me 50,000 rupees today. And the coverage is only 10 lakh rupees. Whether 10 lakh rupees is good enough for my family? How many of you think 10 lakh is good enough to survive for your family? It's not good enough. Am I right? No. So I need to cover it myself rightly. So what is the right amount? It might be 50 lakhs, 1 crore, 2 crores, whatever that is. That's what I'm going to explain what is the amount we need to cover. But if I need to cover myself with 1 crore cover, and if I go for traditional, I need to save 5 lakh rupees per annum, which is not possible in today's time. So term insurance does is that it gives you a 1 crore cover at a very low cost. It's a purest form. It's just like that you buy a motor insurance. It's similar. You don't get anything out of it if something does not happen to your vehicle. Same way, term insurance triggers only if something happens to you. Your family gets the money. You don't get the money. So protecting myself from 1 crore, if something happens, my family will get 1 crore. And the premium is very, very low. It starts with, if an age group of 25, it will hardly cost 7,000-8,000 rupees per annum, which is damn cheap. You can easily afford it. It's a 500 to 700 rupees per month. So that's why term insurance is the right coverage for your family ones. It's not for you, it's for your family. So who has to do it? Only and only a person who is earning, and because of him, family is dependent. So anybody who has a family dependency, whether it's parents, whether your wife, whether your husband, whether your family income unites, Whoever is an earning member and because of him, family might have faced problem during finances, need to cover themselves. Now, are we clear on this? Because then I'll cover you why, how much term insurance we need to cover. These are the 2 points I will cover. What should be the duration of my term plan and how much cover I need to cover. Are we okay? Yes, MB, I am covering that only. How much should be the appropriate cover? Now, there are a lot of thumb rules attached to it. What is the right sum assured? But I'll explain you a very simple one, which will make you understand. Again, I'll put across that if I have an earning of 50,000 rupees per month, my family needs 50,000 rupees per month. I'll not take 50,000. I'll take my actual one. And my family needs 2 lakh rupees per month. Okay, that's why I'm saying so, because 1 lakh is expense and 1 lakh is my savings which I'm doing. Savings for my child's higher education, savings for my pension, retirement. That 1 lakh goes into my investment part. If I'm not there also, my family or my wife will be needing that coverage also. Do I want my family not to have those goals fulfilled? I always want that goals to be fulfilled. So where will that money come from? So I have covered myself with 2 lakh rupees. I need 2 lakh rupees per month, including my investment part. So if I take that 2 lakh rupees, where will that 2 lakh come from? So what I have done is, I'll explain you in a simple language that if I have 50,000 rupees as an expense, including this investments, and I take a 1 crore rupees of term insurance, tell me if something happens to me, my wife get that 1 crore rupees and she invests that into a very safe fund, which is, let's say, fixed deposit. What is the return she's going to get out of it? If a family members invest 1 crore rupees after death into fixed deposit, what is the current returns you get in a fixed deposit? Let's say, not taking an hypothetical 7-8%, average 6%. I'll take a 6% because up and down it goes around and it will come down to 6%. Yeah. So take an example of 6%. 1 crore, 6%, how much it goes out? 6 lakh rupees per annum. Okay. Am I right? Now divide that 6 lakh rupees by 12. How much it goes? 50,000 rupees. So every 1 crore, what is it replacing? Only 50,000 rupees. So what I have covered myself is 4 crore rupees. So what happens is, a lot of people are still sitting down on 1 crore or 50 lakh rupees, listening to Policy Bazaar or listening to newses that, okay, cover yourself with 50 lakh, cover yourself with 1 crore, not realizing that whether 1 crore will be sufficient for you or not. So this gives you a broader idea. If you are earning 50,000 rupees, cover yourself with 1 crore. If you are earning 1 lakh rupees, your expenses, including your investment, goes out to 1 lakh rupees, cover yourself with 2 crores. This is a basic thumb rule. I'm not saying, I'm not including any inflation in it, but it still covers because corpus is there, still there, and your family is just surviving on that corpus interest. Are we getting it? Great. So this covers this, but one most important factor which you need to understand, what is the right duration of my term plan? Because a lot of people are putting across, we are looking forward to nowadays, there's an availability of coverage up to 70 years, 80 years, even 100 years. So should we cover it to, what is the right coverage age? What is the coverage till when we should cover ourselves? Fast, I'm just going to finish off with this. What is the right age till retirement? Okay, so let's say I retire at 40. Prayag, should I cover myself till 40? Or should I retire? If I retire at 70, should I cover myself with 70? Or what is the right coverage? Should I cover myself for 80 years, 60 years, 70 years, 100 years? If I'm getting 70, 80, 100 years option, shouldn't I cover myself with 100 years coverage? Yes, Prayag, I understand. If you have enough retirement corpus, you have taken care of your liabilities, then you can, sure. 70, anybody else? Okay, 50, 60. And nobody thinks about 70, 80, 100? Because there will be lucrative options available. 75, 70 with return of premium. Okay, great. 80. That's what I was asking this answer for. Because a lot of people are pushed to buy term insurance for 80 years or 70 years. Now, why I'm asking you, don't take it on the wrong side, but why do we think we want to cover ourselves for 80 years? The only reason we want to cover ourselves for 80 years is that we think that we will survive till 70, 75 at least, and at least my family will get some money out of it. They will get 1 crore rupees. Am I right? Yes or no? This is the only reason we buy higher, that okay, we survive it and we'll get some. Without realizing, if I'm 25 or 30 years today, and I am taking an 80-year-old plan, it's 50 years down the line, what will be the value of 1 crore 50 years down the line? Can you imagine what will be the value? Your family will get 5 lakh rupees value and today's value. If I talk about future value of 1 crore, it will become 5 lakh rupees. Will they be very happy? And do they need it actually? How many of you have old parents? So we don't need those their money from their, sorry to say that, but I have also got 82-year-old father and parents. I don't need insurances on them. When do we need insurances? When did we needed insurance? When they were young, we were young, they were financial, we were dependent on them. That's when they needed coverage. And why I'm saying so, because higher the cover, higher the premium you pay. So if you buy for 80 years, you are paying much more higher premium. You might even pay double the amount. So if I'm buying a 1 crore policy for at my age for 20 years, which I'm actually requiring, and vis-a-vis for 50 years, 1 year will cost me 20,000 and 50 years might be costing me more than 40,000. So rather than buying a 1 crore policy for 80 years, for 50 years, I'm paying 40,000 rupees. I can buy 2 crore policy, which will cover my family today. So term insurance has to be bought for today, not for future. Your family needs it next 10 years, 15 years, 20 years. That's when you can build up. If you can't build up your right frame of financial planning in 20, 25 years, you are not doing worth working on. Are we getting it? Are we clear? Yes, we can buy multiple term plans. I have 4 or 5 companies, 50 lakhs and 1 crore. I've covered myself with 4 or 5 companies. Every company's pay you. It's an indemnity. It's not an indemnity policy. It's a complete policy. So term insurance is not linked to according to health. It's not an indemnity policy. You can buy multiple and you can be insured. Okay. Are we clear on this? So I'm short of time. I'll be covering on the next topic, health insurance, fast on to it. Again, on this, I know that everybody understand health insurance because you people are from health sector. But one coverage, which again, I'll be talking about is again coverage on this. That is wealth creating insurance plans a good investment option? Wealth creating insurance plans. Ragina, I always encourage to buy separate things separately. So if you want to invest separately, there are products available. Insurances and investment should not be clubbed. That's my own opinion. It should not be clubbed. Term insurance lump sum is good for our monthly term insurance. I'm not getting VK. Lump sum means you pay 1 year, single term you're talking about? Payout? I didn't get you, MB. I think I will cover it up. Let me close this and we'll cover it in the question and answer. I'm just covering on the last part of it. Health insurance. So I'm just going to cover on this, everyone, that how much cover do you think is the right coverage? Again, a question on this. We all understand health insurance, I hope so. How much coverage is the right coverage today? I'll cover every question, but I want to cover this health insurance part. It's a very important one. I need answers. How much is the right coverage do you think to buy today? Should we cover ourselves through corporate insurance of 5 lakhs, 10 lakhs? Okay, 15 to 20 lakhs. Anybody else? How much is the right coverage today? I'm going to break some myths onto it. That's why I'm asking. 30 lakhs, okay. 20 lakhs, greater than 20 lakhs, okay. So to put it across, see friends, we all, before Corona, these numbers were less. Everybody were insured for 5 lakhs. Maximum people were covering through corporate insurances, not taking their own insurances. But post COVID, I've seen a surge that people saw, and this is why happened, because we saw very closely claims going up to 15, 20, 25, 30 lakhs. People who have seen 25 lakhs are insuring them for 30 lakhs. People who have seen 15 lakhs have insured them for 20 lakhs. That's what we are generally doing. So whatever is closest what we see, we actually put across. But what we need to realize is that what the biggest myth in our mind is that today, if I buy 20 lakhs, I'll increase it later on. Am I right? You're buying 20 lakhs today, that okay, next year I'll buy 25 lakhs, or after 5 years, I'll buy 20, 30 lakhs. Am I right? Yes? Yes or no? Yes. That is the biggest myth in our minds. We think we can buy insurance or increase our cover whenever we want. And that is the biggest myth. We can't do that. And why I'm saying so, how many of you seen illnesses like, I'm just going to take an example of thyroid. How many of you heard about it? There are two types of thyroid. One is hyper, one is hypo. Yeah. Do you know that if you are detected with hyperthyroid, there's not a single company who insures you. Hyperthyroid, which is not very challenging in your terms. I'm not even talking about cancer. I'm not talking about heart attack. I'm not talking about stunts. I'm not talking about cyst. I'm not talking about other critical illnesses. I'm talking about there are thousands of diseases which are even not thought about as a critical one. Let's say osteoporosis. If you're detected, you are capped. Type 1 diabetes, you're capped. You're not going to cover yourself or increase yourself. Now, do you think if you're covered 10 lakhs today, it will be sufficient, or your corporate cover 5 lakhs is good enough for you for next 30, 40, 50 years? That's what you are doing as a blunder. We need to buy highest cover today. And that covers can be 1 crore, 2 crore, 5 crores. These are the products available. Now the challenge comes in, our mindset goes around, if I'm buying a 5 lakh, 10 lakh policy today, and I'm paying a 10 lakh premium, 20,000 rupees, how much will be 1 crore policy? It might add up to around 60, 70,000. But no, if I say that, okay, you add only 2,000, 3,000 additional and you can cover yourself with 1 crore cover. There are products available. You just need to look out, search out the right advisors, put across those things, and they will guide you that there are products. But first we need to understand that higher cover is needed today. Okay, so this is what I am going to end up with today. I know there's a lot of things which goes around and there are a lot of things to be discussed around, but I'll start with the Q&A if I have time. But to summarize, before taking up questions, first, you know your expenses. This is today's session's summarization. Identify a goal. Start early, small savings, increase accordingly. That's what I put you across. Inflation adjusted returns, you need to see whether you're getting the right returns onto it, and accordingly map your goals accordingly. So this is what I'm trying to put across. Now I'm open to question of answer. If I have Aisha and Andrew, do I have time?
Yes, sir. You can take up the questions.
Okay, so before winding up, I'll just put you across that Network FP has one good news for you, and that is that we offer actually 3 gifts for you, which is for you people, which is which you'll love to see. That first gift, what gift they are offering is that you will get a free email course for 31 actions in 31 days. So if you enroll this, see, whatever I have said, if you don't put across in actions, it will never be happening. Believe me, I have attended numerous sessions. I am still doing, I'm coaching CFPs in India. I'm teaching colleges. I have completed my advanced level executive financial, MBA just completed in April. I am also taking business coaches from Business Coach. What I'm trying to say that there are a lot of learning goes around, but if I don't implement it, so I am also taking coaching from people, but if I don't implement immediately, it does not happen. So these are good areas of identifying. If I get those accountability. If I have an accountability, na, I'll make sure that I do that. So this network FP is making sure that you are accountable to somebody. So if you can enroll, you will get 31 days, 31 actions, so that you can complete those things. Secondly, benefit two is these are 3 tools they are offering you. One is financial statement, financial matrix, and financial organizer. Whatever I've said, these will help you on this, identifying your whatever you have in your asset base, you can put across in PIDOC. Financial statement will make you understand what your expenses and budgeting is. So all these are financial tools which you'll get when you register for, you take this download that. And third is that you can enroll as a free consultation, like a person like me. So this is a free consultation, qualified professional across India. We have numerous qualified CF financial planners across in network FP. You can have to just search it on the link which AJ has given you, and this will identify. You just need to search out. Let's say if you want to search Delhi, you can write down Delhi. If you want to search out, let's say specifically Puneet Oberoi, so you can search out Puneet Oberoi in that search, and you can find members in Delhi. Or if you want to personally find somebody, you can write down the name also. Or otherwise, you just write down Delhi, and you will get all the financial planners over there in Delhi or in Pune or somebody anywhere you want. So, so this is the link which you can download, and it has a small feedback form for myself also, which will give me a insight about how I have to improve myself. So if you can just fill a small form, and accordingly, this will fill up the benefits. All you'll get that free benefits also.